Hi guys, today's video is on the accrual basis of accounting. It's something that you are also struggling with, so this is a very important video. So what does the accrual basis of accounting mean? There are two parts which you need to remember. Okay, the first part is income is recorded when earned and not when received. Okay, so this is the first part of the accrual basis of accounting. Income is recorded when earned and not when received. The second part of the accrual basis of accounting is expenses are recorded when incurred and not when paid. So from the top, the accrual basis of accounting says income is recorded when earned and not when received, and expenses are recorded when incurred and not when paid. I'm going to give you an example of each to illustrate what it means. So starting with the first one. Okay, income is recorded when earned and not when received. What does this actually mean? This means that irrespective of when you're receiving the cash for something that you have sold, you will only record that income when you earn it. So what makes you earn the income? As an example, when you sell an item, when you deliver the goods to that customer, you have earned that income, even if he is only going to pay you after 30 days. Okay, so income is recorded when earned. You earn the income when you render the service or sell the goods. Okay, so let me give you an example. Okay, so I'll call it example 1 because it's part of the first part of the accrual basis of accounting. So the example is you rendered a service to Mr. Johnson on credit for 10,000 Rand. Okay, so the words on credit means you did not receive the cash. So what does the accrual basis say? The accrual basis say, irrespective of the fact that Mr. Johnson did not pay you, you earn the income when you record the service. So your entry there would be a debit to accounts receivable and a credit to services rendered with 10,000 Rand. Okay, another example of income, or a common one for our module, is interest income. Okay, lots of times on your investments you earn interest and it's not always paid or received on time. So the example could be you had an investment of 10,000 Rand. You earn interest at 10%. Okay, so normally what happens, if your financial period is running from 1 Jan to 31st December, it does not always mean that the interest receipts will go according to your financial year. So your investment might say you're only going to earn interest after every year, but you have to still record that interest on a monthly basis. So again, if I draw a timeline for you, let's say this is your financial period, 1st of March 2015 till 28th of February 2016. Okay, if this is your financial period, 1st of March to 28th of February, that's your 12 months. And let's say you're going to earn your interest every year on the 31st of December. So what happens is the 31st of December will be sitting somewhere here. On that day, you will receive the interest for the 12 months prior to that. So there's 2 months sitting over here which you did not yet earn the interest for. Okay, so when you record the interest income in your financial statements, you have to record the interest for that whole timeline, irrespective of the fact that you're only going to receive this interest in the following financial period. Okay, that is what we call accrued income. It means you have earned the income, but you have not yet received it. Okay, the second part of the accrual basis of accounting is expenses is recorded when incurred and not when paid. So let me give you an example. Let's say your financial period again is 1st of March 2015 till 28th of February 2016. This is your financial period. Okay, so let's say for example, you receive your telephone account for the month of February, but you have not yet paid it. Okay, so in the month of February, you incurred telephone expense of 500 Rand, but you're only going to be paying it in the following financial year, which will be in March. So what that is called is a telephone liability or accrued expense. Okay, so again, if you look at your timeline, you received your telephone bill for February, which is part of your financial period, but you have not yet paid it. So what does the accrual basis say about that? It says irrespective of when you're going to pay that expense, the fact that that expense was incurred in your financial period, it must be in your financial statements. So that 500 Rand for telephone for the month of February will be an expense in the current financial period. Okay, I'm going to give you another common example. It comes with the rent. Okay, lots of times you'll notice that in the examples you prepay rent. So again, let me use the same timeline, 1st of the 3rd, 2015, up until 28th of February 2016. Okay, now in the example, in the transaction, it might say you prepaid rent for the whole year on the 1st of Jan of every year. So what does this mean? This means on the 1st of January, which is over here somewhere, you pay rent upfront for 12 months. Okay, so what does this mean? This means that the rent for this 10 months over here was paid on the 1st of Jan 2015, which is before this period. And the rent for these 2 months was paid on the 1st of January. So what you have to do is you have to calculate the rent for those 10 months, and then you need to calculate the rent for these 2 months, and that becomes your rent expense. So the rent for those 10 months and the rent for those 2 months become your rent expense. But now on this date, on the 1st of January, you had prepaid for 12 months. So in your entries, you've only recorded 2 months of that 12 months. So there's still a 10 months sitting over here at the end of your timeline, which is for next year, which we call prepaid rent. And that is your rent asset. So 10 months of the amount that you paid here would be your rent asset. So that is the accrual basis of accounting. Income is recorded when earned and not when received, and expenses is recorded when incurred and not when paid.